Hi, David Roach, Quantum Economics, Independent Strategy. You may have noticed that Chinese tech shares are plummeting in value on Chinese and when listed on American stock exchanges as well. The reason they are falling is because China has launched an investigation through its cybersecurity space regulator into the data gathering, harvesting activities of a number of companies. The most important among these is one called Didi Chuxing, which is a ride-hailing company which completed a mega US offering a very short time ago and has now fallen approximately 20% since the investigation started. Then there are two other companies. One is a temporary work employment agency, and the other two are truck hailing companies. Their names are Huochebang, Yunmanman and Bosszhipin. Now, this is a very interesting development because it raises, as you will see, questions about have people done their due diligence about investing in Chinese equities on the basis of prudence. It's not about forecasting the company. You might get the forecast of the company right, but then you would get zapped by various political regulatory measures which would hurt the value of your investments. And the question arises for trustees and governors of pension funds and the like as to whether you should be investing in this sort of equity in the first place. But let me explain what actually is going on. First, we need to go back a little bit to the investigation of ANT, which caused their IPO to be cancelled, its linkage to Alibaba and to Jacky Ma, a famous entrepreneur who had become a little bit too big for his certainly boots as regards the Chinese Communist Party, in describing the state-owned banks or state-controlled banks as being pawnbrokers. And that was the beginning of his downfall. And frankly, with a few rare appearances of very low-key type of events, he hasn't been heard of since. So let us examine three things which are important that one should understand before one takes any principled investment to own Chinese mainland equities. The first is to understand the Chinese Communist Party will not brook any form of power base outside its own control. That's like the first commandment out of the Christian 10 commandments, but it is an absolute red line in the sand, and the color is certainly red. The Communist Party, the Chinese Communist Party, is aware that China has enormous income differentials and is creating millionaires and billionaires faster than anywhere else on the planet. And these people's immense wealth risks becoming an alternative pole of power to the power of the Chinese Communist Party itself. And therefore, on numerous occasions, President Xi Jinping has made it perfectly clear that entrepreneurs and their enterprises are subject to the will of the Communist Party. And what happened in the case of ANT-Alibaba and Jacky Ma, which sparked a whole lot of subsequent investigations and fines and limitations of activities and breaking up of companies and so on and so forth, what actually was going on was the Communist Party was reducing the power base of money. They realized that the accumulation of wealth and money outside their system is a threat to their existence, to their hegemony within the Chinese communist system, within the Chinese social system. So they cannot brook that accumulation of wealth should actually become a threat to them. But in the present case, in which we are looking at the probe into the data gathering, data harvesting and storage activities of Didi, the ride hailing company, the two truck hailing companies and the employment agency. What they are concerned about is not per se wealth, although the owners of these companies and their directors are extremely wealthy, because these people have not been in any way uttering or doing anything which would question the supremacy of the Chinese Communist Party. What the Chinese Communist Party is concerned about is that these companies are accumulating data on individuals, harvesting this data and disposing of this data and keeping it to themselves in ways which the Chinese Communist Party, being, of course, at the same time, the government, there's no distinction in the system, that is their prerogative. They do not want alternative databases operating outside the massive surveillance, spying, and data which they accumulate on their own citizens. In other words, if you go back, the best way to describe this is that in their eyes, knowledge is power, data is knowledge. So essentially, they're saying that scientia potent est. Knowledge is power, and they want the monopoly over that data and the power that confers. So what they're actually doing in the present case is taking on not so much the accumulation of wealth as a threat to the Communist Party in political terms, but taking on the accumulation of data as a threat to the monopoly of the Communist Party in harvesting data on individuals in all walks of life and all activities in China. And that of itself is very interesting because it broadens the range of interventions which you should expect as an investor in a company which carries out any of these activities. The timing is also very interesting because Didi had just done a very successful IPO in the United States, and now everybody who bought the shares has been walloped, to say the least. And what the Chinese Communist Party is showing you is that they don't care. Xi Jinping has always said that politics is supreme, that the unity, the singleness of the Communist Party and its unquestioned power in China is the priority over economics always. So what the timing of this particular series of investigations is telling you is that economics comes second. The performance of your equity investment or bond comes second. What comes first is the fulfillment of the political will of the Chinese Communist Party, and in particular of its leader, Xi Jinping. So there is thus a complete lack of sensitivity in China to the reputational risk of floating a stock on the New York Stock Exchange on Monday and taking political action against it and demolishing its value on Tuesday. That really does not matter. What does matter is that in doing so, the Chinese Communist Party is essentially manifesting the priorities and the values in China, which one has to accept, which is that politics, the unique power of the party, is the number one objective. It is the leader in every walk of life. It is the leader of the economy, and the economy is subjugated to it. The reason why this is so important is because if you make an investment in a Chinese, at the moment, say tech stock or a stock which accumulates data, you may make all the right judgments and do all the right due diligence and research on the fundamentals of that corporation as a corporation. But that is not what the game is about in China. That is subjugated to what the political game is about. That is an additional risk factor in undertaking investments in China, whether it be in equities or whether it be in the fixed income markets of these sort of corporations and entities. It is something which investors at the level of their due diligence, at the level of what investments they are authorized to make have to consider way over and beyond and in the first place before considering the worth or worthiness of any particular individual investment. Thank you for watching and please subscribe. This was Quantum Economics.